Sandeep Jain, Executive Director at Monte Carlo Fashions, is joining us on the phone line. Mr. Jain, good morning. Thanks for taking our call. What's the season looking like so far, sir? Is it cold enough for lots of the woolen wares to be flying off the shelves?
Yeah, exactly. You're absolutely right. Definitely the winter is on time, and also the marriage season was very good in November. So overall the sale is very good.
Can you give us any numbers, Mr. Jain, in terms of the percentage growth you may be seeing over last year? Is it consistent with what you averagely see over winters?
Yeah, I think in the beginning of the year we gave the guidance of 15% year-on-year growth, and in the first two quarters it was flattish revenues. So balanced growth is going to come in third and fourth quarter. So you can assume that to achieve the 15% growth, we need to grow at least more than 20% in these two quarters to achieve the overall growth.
Does it look like you will do that, Sandeep? Good morning. And also, how strong would quarter three be? Because I believe traditionally this is the quarter that accounts for the bulk of your revenues.
Yeah, quarter three contributes almost 60% of our revenues, and the quarter four generates almost 15% of our revenues. So both these quarters are very good for us, and it seems that the kind of season we are having right now, we're going to achieve our growth.
So 20% quarter on quarter for the next couple of quarters seems to be, or rather year on year seems to be a given.
I don't see any difficulty in achieving that kind of growth. So still 15 days are left in December. So I think we should be able to achieve that.
You are also trying to diversify a bit, because earlier woolens accounted for a large portion of your sales, but you're trying to diversify that. You're trying to get more into cottons. What's the strategy? How has that been executed so far? And are you earning better margins on cotton, or is it just spreading out the risk between different business segments?
See, cotton business is growing double digit as compared to woolen business, which is growing single digit. So overall growth of cotton business is more. And if we see that, if we see the cotton contribution now, if I take about the woolen sweater is contributing around 30%. The rest is coming from the cotton and cotton materials. So if the company is growing double digit in cotton, which is ensuring that the dependence on third quarter is reducing every year. The dependence which was at one point of time was 100% on sweaters has come down to 30%. And the dependence on quarter three, which was 64%, I would say 4 years back, will come down to around 51% this year. So that means the cotton segment is growing faster.
Would this year be an anomaly that the first half is flat and the second half you will see 20% growth? The reason I ask you is because this question is because FY17 you've done about 580 crores of revenues. You've targeted about 1,000 odd crores by FY20. In 3 years for you to achieve this, you'll probably need to notch in a number which is slightly higher than 20%.
Yeah, actually, because in last 2-3 years we have seen the economy was not doing at that, what we were doing about 5 years back. So I assume that the economic growth would be more as compared to last 3 years. At the same time, this year we gave the guidance of around 670 to 680 crore. I think we're going to achieve that guidance also. So based on that, if we could do around 20% growth in next 2 years, I think the 1,000 crore is not that far from us.
Okay, and you will do this growth with margins coming back to earlier levels of 20 odd %, or would they stay around this 17% that you've clocked in the first half?
See, margins guidance we gave for the year was 18 to 19%, and we are hopeful that we'll be able to achieve this guidance.
Okay, so if that is indeed the case, and therefore your margins will move up in FY18 over FY17 with a 20% or 15% revenue growth, is it safe to assume that your bottom line growth or the profit after tax growth would be higher than that 15%, maybe 20 odd % or nudging 22, 25?
See, can't comment on this moment because still we have 2 quarters left. We have a lot of sales which is coming in last 15 days of this year, and then the sales season which is going to start in January. How it happens for us, then only we can comment on the guidance. But what we assume is that based on our previous experience, that we'll be able to achieve 18 to 19% of EBITDA in the financial year.
Mr. Jain, I have one final question for you, and that has to do with how you hope to be able to achieve this growth. Are you looking at expansion of retail outlets? Are you looking at potential inorganic growth of some sort? Are there any targets on your radar, so to speak? How are you going to go about being able to achieve these targets?
See, we have started a few new segments in last 2 years. One was cloak and decor economy segment, which we are very hopeful that it will give us very good growth as it is operating in the economy segment in the market. And then we have also started a kids wear brand 3 years back, which is also doing very well. And we're also putting more focus on the areas where we were not present earlier, like South and West, where I think growth is happening around 30% year on year. So these are the areas which will give us the growth, and based on the existing categories, which is keep on growing in the northern and eastern region, I think we will be able to achieve our overall yearly guidance.
Have you said that you're looking for a strategic acquisition opportunity?
We shortlisted a few opportunities, but nothing is actually, very attractive as of now. So as of now, nothing is in hand as far as any acquisition is concerned.
But how much would you earmark for some such strategic opportunity if you've already worked out some of the numbers?
No, actually, we have 150 CR of cash lying on our books. So, but we have not earmarked anything. It all depends on the opportunity which comes to us.
All right, Mr. Jain, appreciate you speaking with us. Thank you very much for that quick update.